What's going on, guys? Today is Wednesday, July 22nd, and I wanted to go over what I saw in price action today. And as you can see, or as you probably saw when you were trading, it was a very tough day. It's a lot of back and forth, even though price was continually pushing higher. Um, and I know a lot of people probably got caught up in either FOMO, trying to chase the move, or in all this high resistance liquidity, just back and forth. People going short, going long, getting chopped up in that price action. So I just wanted to do my little review. Even though I didn't trade, like I said, I want to show you guys why I didn't trade. And I also have some screenshots of what I was looking for during live price action. So I want you guys to stick through this video, especially if you were someone that didn't have such a good trading day. You might have got chopped up and back and forth price action. I want you to be able to watch this video and come out with something that'll hopefully help you in the future, be able to recognize similar conditions and know when to stay out of the market. So here on the dollar index on the daily chart, like I've been saying for the past however long, I'm bullish on the dollar. I want us to keep pushing higher after we took out these short-term relative equal lows into this balanced price range. We get a nice rally off of that throughout this week, and we had this change in state of delivery validated the last down close candle before the rally higher. Once we close above that, price returns, immediate rebalance to the high of Friday's candle, and we get a nice push off that yesterday. And then with today's price action, we again have another immediate rebalance. So notice there are no gaps being left in this price action, which shows me that price doesn't really have a reason to trade any lower. So after this immediate rebalance, I'm remaining bullish, and I want to see price trade through these relative equal highs on the daily chart and continue into this monthly fair value gap or stop run fair value gap within the breaker that I've been looking for. So here we have NASDAQ on the daily chart, and you see I was watching this sell side imbalance, buy side inefficiency, and yesterday we traded up through this wick consequent encroachment that I was looking to act as resistance initially, but we trade into the SIBI right up to the upper quadrant, and you see we kind of back off from there. So I was looking at that to be the reason to start looking for shorts, because price was, to me, showing it was weak. And like I said, I've been bearish on the weekly chart, so I'm looking for price to deliver lower. We also had the low of this bearish order block formed by this up close candle that is also trading into this bearish order block. So you see in sell side delivery, we are respecting up close candles as we continue lower. So with that being said, I was looking for price to deliver lower from there into these lows here. Even though this low on the right is slightly lower, I'm still using that as relative equal lows. I'll show you on a lower time frame. This is still a large liquidity pool if price is going to be weak and show us that it wants to reach down into that. And then we also have the consequent encroachment of this daily wick that was formed after this stop run. So that is a nice objective because it is basically an imbalance on a lower time frame. So if we trade through these lows, I am looking for price to deliver to this 590.75 level. And I'm not trying to predict price. I'm just looking for short-term objectives within what I see as my weekly bias. And because I am bearish, I am looking for us to deliver lower. So here on the hourly chart, we have this series of up close candles, 4 candles that trade into the upper quadrant of that daily fair value gap. And like I said, I am bearish, so I was looking for a portion to be left open, which it was here, and then price breaks lower. With this close of this candle right here, this order block is validated, or a change in state of delivery I was looking for. So when price retraces into that in pre-market, we also trade into the low of this sell side imbalance, buy side inefficiency, including this small tiny volume imbalance. You see price basically trades to the high of that, almost to the tick, which leaves this short-term high in pre-market that is used to deliver London's low and then this other relative equal low. And then you see from there price reverses in the AM session using this fair value gap again as an inversion fair value gap this time to deliver higher. I was not looking for that, but that is something we will talk about in a little bit. So real quick on the 5-minute chart, looking at that pre-market move, we have see price here is trading in that hourly bearish order block just ahead of pre-market 7 o'clock. And we leave a short-term high just below that SIBI, the hourly SIBI. We get a nice strong candle into it in the macro, just ahead of 650. This turtle soup into high time frame Peter Ray. And then we break lower, closing below this last up close candle, which validates this as a change in state of delivery on the 5-minute chart. We drop lower, price retraces into that opening price. You see the bodies staying below consequent encroachment of this buy side imbalance, sell side inefficiency, which was previously used as support. Well, after we have a change in state of delivery, we are now in a sell delivery program, and price respects that once we drop below it. And the fact that we respected consequent encroachment shows me that price is indeed very bearish. And you see this small fair value gap here. Price used that to displace lower, delivering London's low. And we have a little bit of consolidation. And then we finally get a strong delivery through London's low and also this short-term relative equal low to the left. And then after market open, or just ahead of market open, we have this stop run on the short-term low, and we get a nice expansion higher. I was looking originally for continuation lower, but I will also talk about knowing when to shift gears, because at this point, once London low is delivered, I was not looking for anything else besides the continuation, and I wanted to see this intermediate term high remain as price delivered lower, but obviously you see we didn't get that here. So there was no trade for me after 9:30 because I don't really trade pre-market, even though I end up watching it most of the time. It's not within my model, so I'm kind of staying out of it for now until I can gather some more data and information on it. So going into what happened at 9:30, you see price immediately just displaces higher after the damage was already done pre-market to London's low and all this sell side in here. Price starts rallying higher. And like I said earlier, I was looking for this immediate term high that was made pre-market to remain untouched. But obviously right at 9:30, we kind of start displacing towards it. So that invalidated any shorts for me, and I was not looking to go long because it is against my high time frame bias for now. So I decided to sit on the sidelines and just tape read the session, which is, I'm glad I did, to be honest, because you see how price was trading all through here. It easily could have been a day where I was looking to get something and it wasn't playing out, and I get stopped out a couple times and end up tilting and blowing an account. So what I've learned is you have to know yourself and know what market conditions you are successful in, and being able to stay away from conditions that are not congruent with what you're looking for. So with that being said, immediately displays higher at 9:30, kind of work our way higher into this low, this daily fair value gap. Also looking at the quadrant levels of this opening range gap, see nice big, what is that, almost like a little over 200 handles. So price initially delivers consequent encroachment and drops down a little bit right into the upper quadrant. It's not random. Price is trading to specific levels, and from there we rally, explode through this high. People were probably trying to go short in here, but not me, because like I said, my model wasn't present. So no trade. Displays through that high, deliver open range gap upper quadrant, and we just fall short of this current new day opening gap and the opening range gap high. So this portion right here is left unfilled, and that is kind of what tipped my hand to start looking for longs, if anything. because usually when price leaves a short-term high just below a new day opening gap or new week opening gap, it will give that last little delivery into it, regardless if it's bearish or bullish. And we also have previous day's high up here, which has not yet been delivered. It is 12 o'clock, so lunch session, and ES delivered that high, so I think around this time in the morning session. So I'm sure a lot of people were in here trying to go short. You see prices just a lot of back and forth, leaving this high untouched, of course, not trading into this new day opening gap. And if people don't have these levels on the chart, they're going to miss a lot of trades and a lot of ideas, or a lot of things that could have kept them from getting in a trade. So price just very high resistance. Everybody going long and short is getting chopped up in this, but still keeping our narrative or bias that I was looking for higher. So I'm not interested in looking for anything. Even though I'm tape reading, I'm still treating it as I'm actively trading. So through this whole price action, I was not looking for anything. You see price is just working this first presentation, fair value gap back and forth until around 10:30. We finally get a run on these relative equal lows that have been generated, buy stops or sell stops resting below. The market takes that out, trading into this balanced price range, which was created in this run higher. Then price drops lower into a key level, this opening range gap upper quadrant, and then we trade through it. So when price returns back into it, it should act as support if we are going to be bullish, which you see it does here. The bodies are staying within that. Also trading into this opening price of this order block that again traded into that key level. So this is what triggered me to start trying to look for longs. And here I'll pop up on the screen the screenshot of me watching price action live. I didn't record it because I'm not trying to do none of that yet, but I still tape read even though I know I'm not going to trade. So you can see after these short-term relative lows were taken out, I was looking for price to find support. I still got those same levels, opening range gap high and that new day opening gap. I was looking to see price deliver into that. So throughout this price action, what I was really looking for was this wick that was created after this run on the relative equal lows. I found that price was supporting that level, not trading through it, even though we wicked into this order block. The bodies are remaining above that level, which is showing me that price is in fact bullish, especially going into this London close macro, where I anticipate to see spooling as we deliver the buy side and then this unfilled gap, the portion of that unfilled gap. So here's another screenshot I wanted to show you guys. Again, watching live price action, that same levels on my chart. We have the London close macro has started and price begins spooling towards those relative equal highs, which I anticipated. And we leave a breakaway gap, which I was looking to remain open because I wanted to see price spool quickly to deliver the objective. And here on the chart, bring up that same gap that I was looking for price not to trade into. You see we do in fact leave it open. Price, we have that bullish breaker. I think price just closed above it. Yeah, just closed above it. Wick back into it. Bodies respecting that, the closing price. And then the macro continues a strong candle bullish. We get a fair value gap here, which is used as discount in the macro to deliver these relative equal highs and that opening range gap level that I was looking for. So I hope from this review you guys learned that even though you can anticipate where price is going, does not mean that you should be taking a trade, especially while you are learning, because 9 times out of 10 you will get chopped up in a day like this. And I'm not even saying I wouldn't have, because if I was actively trading, I don't know, it could have been a whole different story. But being able to just sit back and know I'm not going to take a trade and clearly analyze the market is giving me the skill to be able to do this in the future consistently. And even though this trade did play out how I anticipated it to, I am not upset or having FOMO that I missed out on a trade that I could have hit because, like I said, I avoided bad market conditions that I would have previously got chopped up inside of. And that is a skill that I encourage everybody watching this video to learn. As a trader, you will not be successful if you are not able to stay out of the charts when it is not time to do anything. And I think the main takeaway I want you guys to leave this video with is that you don't have to be right every day, because obviously I was looking for lower prices, but you have to know when to shift gears and when to stay out of the market. Like today, I was able to shift gears internally and start looking for higher prices, even though I was bearish, not trying to force any shorts like I'm sure a lot of people did here, and being comfortable with seeing myself be proven wrong on my bias, but still being able to tape read and see what price is reaching for and be able to do that accurately, because I know one day when it is time for me to start trading like this, I'll be ready for it because I've done the work on the back end. So yeah, I hope you guys learned something. Always comment, like, whatever. If you want help with anything else, let me know. I'll catch y'all on the next one.